How to trade with Heiken Ashi candlestick chart patterns. Heiken Ashi is a Japanese term which means average bar. It is a popular tool in crypto, forex, and stock trading as it has the capability to show the market's reaction and volatility. Traders can use Heiken Ashi candlestick chart patterns to trade with, and they are often seen as an attractive alternative to Western chart patterns. Some of the most popular Heiken Ashi candlestick chart patterns are Morning Star, Evening Star, Bullish Engulfing Pattern, and Bearish Engulfing Pattern. Stochastic Oscillator. The third indicator is the stochastic oscillator with the parameters 5, 3, and 3, which often triggers entry signals by crossing its signal lines. As an oscillator, this indicator is used to show how much the price has changed. If the trend is bullish and the indicator values are low, we may expect growth. In most cases, the stochastic shows the end of a correction well. Our strategy will use it to confirm entry into the market. Opening a buying trade. When buying stocks, there are a few requirements to consider. The market trend should still be going up. You also need to trade on larger timeframes than the 5-minute one by not jumping back in when the trend reverses. 1. The price is within the range shown by Heiken Ashi, implying an uptrend. There are a couple of ascending candles which show a sudden increase in prices. 2. The stochastic oscillator value is higher, with the signal lines not crossing. We only care about the general direction. Stay away from the market until all of the necessary requirements are met. Open a buying trade if all the criteria are fulfilled on 5-minute chart. The chart is similar to the usual Japanese candlestick chart in that the color of the candle indicates the direction in which the price is moving. The main difference between a regular Japanese candle and a Heiken Ashi candle is that a special price averaging algorithm is used to build it. Because prices here are presented in an average form, they do not show the exact opening and closing prices for a certain period of time, but the direction of price movement becomes very pronounced and easily noticeable. At the same time, unnecessary noise from minor price movements is not displayed on the chart. For this reason, Heiken Ashi charts are often used as a technical indicator in addition to the standard Japanese candlestick chart. Often, this approach allows you to quickly identify current trends. Heiken Ashi charts can be used independently, especially in swing trading and investing. Forex traders tend to use Heiken Ashi charts more as an indicator. This gives them certain advantages, which will be discussed later. The opening level is considered as the average between the opening price of the previous bar and the closing price of the next one. The closing level is the average between the closing price, opening price, high, and low of the current candle. There are special mathematical formulas for calculating each price bar on the Heiken Ashi chart. Because of this, it is impossible to determine the exact price for the opening or closing time period. When trading during the day, this can be a problem, as it is important to see the exact price, especially when trading from a chart. For long-term traders, this is not a problem, since the opening and closing of the price bar are not as important in trading as, say, the last months or years. Heiken Ashi indicator signals. A distinctive feature of the modified chart is a small or absent shadow in the presence of a pronounced trend line, the lower one for bullish candlesticks on the uptrend, and accordingly the upper one for bearish candlesticks on the downtrend. In addition, the candle usually opens around the middle of the previous one, so price gaps practically do not appear, and if they do, then the classic trading strategy for closing it usually does not work. Since Heiken Ashi belongs to the group of trend indicators, let's start with the corresponding signals, a change in the color of the chart, and the absence of shadows as shown in the figure. Confirmation of the trend by Heiken Ashi candlesticks. When opening a trade, we adhere to two basic rules. Before entering the market, there should be at least 3 candlesticks of the same color and direction. If the candle bodies are growing, this indicates the development of a trend. Accordingly, when the trend ends, they decrease and the shadows increase. The next one will be a bar with a short body and long shadows, i.e. an analog of the price action doji pattern. This is a strong reversal signal, given that the Heiken Ashi candlesticks remove random movements. However, you need to make sure that there is a trend before entering the market. Heiken Ashi reversal candle. The doji candle should be checked for a fundamental background. If strong news comes out at this moment, This signal may turn out to be false. To avoid a news or speculative trap, keep the standard chart open, which in this case will be a leading factor in relation to the Heiken Ashi. If the trend reversal turns out to be true, then you can safely enter as shown in the figure above. The last signal that Heiken Ashi candles form will be the determination of the consolidation period. On the chart, it looks like several candlesticks in a row with a small body, while the color is unimportant, as is the length of the shadows. Heiken Ashi indicator in the period of sideways movement. To confirm a sideways move, you can use any channel indicator, such as the stochastic oscillator. Always remember that Heiken Ashi candlesticks are calculated, so lows/highs of the body, as well as shadows, do not mean that the price reached these levels. Trading strategies using Heiken Ashi. From the point of view of graphical analysis, you can use and work out all the standard patterns, triangles, flags, head shoulders, and others. The working time frame is recommended to be at least H1, but given the delay, you should not go down less than M30. Once again, we remind you that currency pairs should be highly volatile, otherwise Heiken Ashi candlesticks will smooth out not only the noise, but also quite profitable sections of the trend. Separately, it is worth mentioning the moving averages. Among technical indicators, they are most often used in conjunction with graphical patterns. When reading the strategy description, which examines signals at the intersection points of the moving averages and the chart, beginners expect similar behavior from Heiken Ashi standard chart and Heiken Ashi candlesticks with the same moving average periods. For calculating any type of moving average, real opening/closing prices are used, so it has the same shape and intersection signals on both charts. However, Heiken candlesticks provide additional entry points that allow you to enter before the breakdown point and thus increase profits. The moving average only distracts attention. Oscillators that indicate overbought or oversold periods complement Heiken Ashi candlesticks well, as they show only the direction, not the trend dynamics.
Please like, subscribe, and hit that bell button for more videos.